The developing momentum and volatility on the 12-hour and daily charts is suggesting a move of significance will likely occur within the coming week. In today's video, we're going to be discussing exactly what this move may be, how the price action is developing on the macro and short-term charts, and even the broader markets. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having an absolutely fantastic day. In today's video, we are taking a look at the macro, the weekly, the daily and the short-term charts, going over exactly what is happening, the key levels you should be paying very close attention to, and the likely next moves. We'll also be taking a look at the altcoin market and the total market cap in today's analysis. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. That channel is absolutely free to everyone who can join. It is the first link down below. If you are interested in taking your trading to the next level, you can join us on the VIP channel. The pinned comment in the free channel will have more information by clicking my name, or our first two links, the entire trading track record spanning back since 2021, and the second link being a 10+ minute video. You'll get access to trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Check it out, join up. Again, main VIP channel and the various group chats with all our members. You can check it out by clicking the pinned comment. Let's dive on into the content. So taking a look at Bitcoin, guys, there are a few things that is developing we need to be paying very close attention to. First and foremost, we have got our daily RSI trend line. We're coming very close to potentially showing a positive momentum shift through the cluster of price action since that 20th of January 2025 top at around that 108k region. Since we have had that retest on our daily high, we have been in a downtrend ever since, and as we can see, we do have a downtrend on the RSI, which is reflective of negative momentum or falling momentum. We are in a consolidation range, which we have now been in for nearly a little bit over 2 weeks, and as we can see on the daily chart, we can see that RSI is beginning to creep up towards that downtrend, potentially hinting a positive momentum shift is coming. And if we see that momentum shift, it is likely we will see a rally through the 50 EMA and potentially up to retest that weekly downtrend. We'll come back and discuss that. We have also seen a bounce on the low range of this horizontal consolidation, retesting and bouncing from that sell side liquidity level almost perfectly, a move we were actually able to catch in that VIP channel. You can see over a 72% profit on a 33x leverage long for Bitcoin right from that low. So there's a nice move over there, and we have seen a nice rally on Bitcoin since that low, so we're discussing what that means as well. We can also see on the altcoin market we have had a bounce from its respective low, again retesting our $850 billion region, resulting in a short-term rally for the altcoin market. Nothing too intense. We have seen some altcoins lead the way, so there is a bunch to be taking a look at today. Let's move over to our data to take a look and start on 24-hour volume and liquidations. Volume is looking a little bit bleak at 148 billion, down 19%, and liquidations dropping a considerable amount of 60% down over 24 hours at 135 million, 55 million coming from longs and 80 million coming from shorts, as the market did see a nice move toward the upside on the short term over the past 24 hours. Moving over to the DXY is now bouncing and retesting a critical level of weekly support. This is going to be the prior yearly resistance. Now, this resistance started November 2022 and continued all the way into December 2024. So a 2-year plus level of resistance we are now retesting as an area of support. Again, a potential reversal point for the DXY a potential bouncing point towards that upside. This would be marking a confirmed support resistance flip if we were able to sustain above this level. If we drop back below this level, this will be marked as deviation and we will see a correction and continuation back towards the midline. So we're on this, I guess, edge of a cliff here, this breaking point, this moment of truth, really going to determine where we are going to see the DXY now move. And again, the DXY generally indicates where the risk asset market is going to go. Not a short-term basis, but we zoom out to a higher time frame. Generally, when the DXY is moving generally up, we see the risk asset market move down and vice versa on a higher time frame. So it's more about the direction of which it is moving, and we see that inverse correlation on the risk asset market on a general basis around 70% of the time, but the correlation coefficient on a high time frame is around 0.7. So we are watching very closely here. It is going to be very important, and that has a lot to do with how Jerome Powell, particularly the Federal Reserve, handle the interest rate reductions moving into the future, and how inflation is affected by potential tariffs which have been more recently imposed by the new president. So we do have to keep our eyes open and aware of potential changes in the global macroeconomic environment and how those changes can potentially impact perceived systematic risk and thus the risk asset markets. Moving over to the S&P 500, now we have seen some good news here. The S&P 500 has managed to see a break of the RSI. Now, for us to see a confirmed positive momentum shift, we need to see a close. Since the RSI is based on closing prices, not where the price is. It's based on the closing of the candle. We need to see in 1 day and 23 hours the price action sustain above, so the RSI is able to close above. If we do see that, that is going to be a leading indicator for a potential continuation upwards. Again, since this top here, we have had that bearish divergence. It is possible, it is very possible, we will see a continuation upwards to retest that trend line again. Okay, that uptrending resistance around 6,400-ish. If we see that RSI sustain, will that play out immediately? It could take some time. So it is looking optimistic. It is not there yet. We need to get that close, but it is looking much, much better as we move forward into the new week and potentially, hopefully next week. So some optimism there. Some potential hope there for the S&P 500. That is it for the broader market updates, guys. Let's jump over it. We're going to be taking a look at the altcoin market, discussing how the altcoin market is looking from a hourly, from a daily, and a weekly perspective. We'll be going over the total market cap. We'll be going over Bitcoin's short-term price action. Very important stuff here, as this range is going to really determine where Bitcoin moves on the higher time frame, the implications of those high time frame moves, and again, exactly what Bitcoin will need to do on a 12-hour chart plus to see a continuation higher. So before we get into that, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You're probably wondering, why should you do that? Well, it's pretty simple. Number one, you'll get 15 to 45% trading fee discounts based on your trading volume for life. Number two, you'll support yourself in your trading journey by doing so. Number three, you'll support me making this content. Go ahead, it takes a few seconds, and we'll see you back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's jump straight back into it. I want to start on the altcoin market, and very quickly we're going to smash through altcoin information today. The altcoin market is in a horizontal consolidation between 850 billion and around 940 billion, marked out by our horizontal lows, as you can see, marked out by the gray box, and the horizontal high marked out by the gray box. We have retested the high side twice now and the low side around about 3 to 4 times over the course of around 2 to 3 weeks. This horizontal consolidation is going to determine the directional continuation of the altcoin market, and more so where the altcoin market will likely go, not only on the short term but on the weekly and potentially the monthly time frame as well. If we zoom out to a daily chart, we can see upon the breakout of this consolidation, we will as well be breaking the 50 EMA or the 200 moving average toward the up or the downside. We also have a downtrend on the RSI, which is indicative of, again, falling momentum, and that momentum is reflecting, again, we do have overall exhaustion in the price action. What we can see with this price action is we do have decreasing volatility as expected due to this consolidation, as we have, again, the moving averages compressing towards each other. With this decreasing volatility and the RSI moving towards the potential positive momentum shift, it is suggesting to us that we are going to have a very reactive move in the price action upon the apexing of this trend line. So it is likely we are going to see a reactive and very large move for the altcoin market when we see a break of the horizontal high or the horizontal low. Now, as you know, horizontal consolidations are neutral patterns, so the probability right now for a directional move down or up are more or less equal. The only thing we can really do to get a bearing on what is more likely is look at leading indicators such as momentum. Momentum suggesting how the buyers and sellers are adapting within the moment of consolidation over the higher time frame. If we do see that RSI break upwards, it would suggest that during this consolidation period, during this entire range since the top at 1.14 trillion to again where we are now, the buyers are able to step back in control, and we will likely see the price move through these horizontal highs. So if we're looking at confirmation for the altcoin market to see some sun again, to see some life again, I'd be watching two very important things. Number one, I'd be watching for a break of the daily 50 EMA that is going to line up with the horizontal high, and I'd be watching for a break of the RSI downtrend. If we get both of those things occur, that is going to likely trigger a continuation higher for the altcoin market, potentially back up to 1.13. If not, if we do not see that, and in fact we see that range low break, we do run the risk of higher time frame corrections. The reason we say that is if we zoom out over here, we can see a few things. Number one, we do have a potential bearish divergence that has been playing out now for quite some time, and if we see a bearish divergence preceding a breakdown of a critical horizontal structure, is likely a commencing downtrend, or the start, or I guess the trigger for a continuation in that developing downtrend since that prior high. So we could see the altcoin market actually tumble down to that 200 moving average on the weekly chart if we do see this horizontal high break, and for that horizontal high at around $840 billion to break, we would need to lose that short-term horizontal range we just discussed. You can see how all the pieces, all the dominoes are lining up, and we just need to wait to see which way it falls and then react and jump on that moving train. Moving over, the total market cap is in a very similar situation. Now, the reason I say it's in a similar situation is because the entire market is more or less in a similar situation right now. We have a very similar pattern here with, again, our horizontal levels and our bearish divergence. We have a bearish divergence here on the weekly chart, as we can see, developing from our two peaks at 2.55 trillion and around 3.66 trillion. We have also got a horizontal level of significance, which is our 2021 high. A loss of this horizontal level of significance will mark this as deviation. Again, bearish divergence preceding deviation results in continuation. We could see a move back to that 200 moving average. Worst case scenario. That is worst case scenario. Best case scenario is we are able to sustain. This is for the altcoin market too. We are able to sustain above the critical horizontal level. We are able to flip this area as a support, okay? We have a support resistance flip, and then we see a continuation back toward the upside to potentially break that RSI trend line and see one final move upwards before we have the top and then continue. That would be best case scenario. But in terms of what is more likely, again, since our trigger points which determine continuations have not been invalidated, the probability for these moves are quite uncertain. If we move to the higher time frame now, this entire range here we have been in is a representation of indecision and uncertainty. Now, you're probably wondering, well, Whale, how is that the case when Bitcoin's been going up so much? The reality is this consolidation here is entirely different to the consolidation we had back in 2024. A horizontal consolidation, and in this instance, a horizontal consolidation as a consequence of indecision surrounding perceived systematic risk, as a consequence of, again, the impending and recently implemented tariffs and the impact that may have on inflation, has caused the Federal Reserve to somewhat change tune in regards to their expectations of future interest rate reductions. Now, we know if we zoom out to something like this, let's go ahead and take a look at this flow chart, that interest rates, right, this flow chart here, not only determine the trajectory of perceived systematic risk, and we know perceived systematic risk, as per our risk chart over here, massively determines the beta between cryptocurrency and stocks and how they perform in a macroeconomic environment, and most importantly over a large time frame. But we know that interest rates, okay, particularly falling interest rates, massively influences the strength of the dollar, and we know there is a correlation coefficient, an inverse correlation coefficient for the dollar and the risk asset market. So we have those connections, we have those dots connected over here, and we're not going to get into that today. Again, there's a lot of information there we can go into another time. We have done it many times on the channel, but just not for today. That show us, the reason why we have seen this consolidation. The simple reason is, the reason we haven't been able to break these highs or these lows is because the market is uncertain. And this consolidation is a representation of uncertainty. It's horizontal, okay? So we are waiting to see how the Federal Reserve reacts. We are waiting to see how the information develops, how the inflation data develops, how the Federal Reserve acts to the future interest rate reductions before the market is confident to make a definitive directional move. All we can do now is be aware of the consequences a definitive directional move will have upon the break of the high side and the low side worst case scenario, and of course take advantage of the short-term price action and how the short-term price action could give us some hints towards where the price will move on the higher time frame. A lot of people say, well, Whale, all you're saying it could go up and it could go down. I mean, that's a very simple explanation. There are nuances to trading. There are elements to analysis that are sometimes, ambiguous and sometimes are neutral. And it is more about how than what sometimes in trading. It's how you execute your decisions instead of what you were doing, okay? So it is the nuances and the little elements that really matter in trading, and the plans you set in motion and the plans you have which you can execute on in a later period that actually make a difference, not so much what you always have to do in the moment. If we're taking a look at this consolidation here for 8 months, we were going down. For 8 months, people were saying we're in a bear market, we're going to crash to lows, we're going to go back to 20,000. And I was one of the only people who were saying the entire time, this is not a bear market, this is consolidation, we are going to see a continuation upwards, because we use more than just the price action to assess how the market is going to respond. Remember, the market is cause and effect. The drivers of the market is perceived systematic risk. Perceived systematic risk is the perception of risk in the economy in a future period and how that relates to the risk asset market. The market is not the economy and the economy is not the market. The market is a representation of what the economy is perceived to be in a future period now. That is how it works. So there's a lot of information there, but let's get into the analysis to keep it simple, guys. If we break the weekly low, we are going to see a higher time frame correction. It is likely upon the loss of this low, we enter a weekly downtrend, potentially a bear market, okay? That is simple as that. The reason being, if we lose this level, we enter a low historical resistance range, okay? Volatility will massively spike and the momentum will drop all the way down, and we'll see a rally, or should I say a correction, aggressive correction toward the downside. Alongside that, we will see the total market cap and the total altcoin market cap aggressively drop through their key weekly levels of support, marking deviation on both charts, marking extended corrections. We do not want to see that. Best case scenario, we see a break through the daily high, which is the red line. A break of the daily high will lead to a similar yet completely opposite scenario where we have increased bullish volatility and momentum toward the upside. We enter essentially price discovery and we see the next aggressive leg upwards. So those are two very obvious statements. The tricky thing is, what would trigger that, and how do we know which is going to occur? Again, the nuances are important. This is why we have to look at leading information such as momentum. If we take a look at this price action, this entire cluster of price action here, we can see momentum has been falling. We are waiting for a positive momentum shift, meaning we're waiting for the RSI to break through. Upon the positive momentum shift, the probability shift in favor of continuations into the range high. And if we retest the range high from a position of strength, something we have not done yet, it is more likely than not we will break through. If we take a look at the current consolidation on the short term and then zoom out to the downtrend forming that consolidation, we can see there is a downtrend in the RSI as well. We can see the daily has not yet broken through, but we are coming very, very close. So there's indication here, maybe in the next 24 hours or the next 72 hours, we could potentially see a move upwards. But most importantly, for us to confirm that, we will need to break that 50 EMA. That takes us to the short-term charts. Let's start on the hourly price action. As we can see, we have had a bounce from that low on the horizontal consolidation, and we haven't quite met that high yet, but we have retested that sell side and we have bounced, which is a good sign. If we zoom out to the 4 hour, we can see this level here coincides with around 98,400, which is exactly where that 50 EMA level is sitting on the daily. So we know that a break of the range high breaks the 50 EMA, and we know that if we break the 50 EMA, the daily momentum flips positive, and that will increase the probability of this weekly downtrend breaking, which could trigger the move back up to 108. So it is very, very important we break that horizontal high before we lose the horizontal low. If we lose the horizontal low side, the measured move, again, the depth applied to the breakdown, could potentially take us sub 90,000, and again, or into 90,000. If we move into 90,000, what would happen? Not only would we lose the 12-hour 200 moving average, okay, which will be the first time we would have lost the 200 moving average since essentially breaking it through within this consolidation back in October, but it would likely trigger a correction into that daily 200 moving average and just below that horizontal support. So some very important levels to watch, guys. As you can see, the building blocks are really stacking up, the dominoes are lining up, whatever you want to say it. The market is kind of getting ready for a massive move, and I don't really like to say massive move because, you know, on a short term, at 1% move is a massive move. On a higher time frame, 10% move is a massive move. But a massive move in terms of significant. It is getting ready for a significant move, which could shape the next few weeks of the direction of Bitcoin and even the altcoin market. So we do need to pay attention to this channel, this horizontal range. We need to pay attention to how the momentum's developing over the course of the next day, over the course of the next few weeks, and that is simply what I am going to do. So if you like my analysis and it resonates with you, congratulations, that's awesome. This is the place to be. If you don't like it and you go your own way, that's fine too. There are plenty of ways to skin a cat. There's not one way to analyze a chart. There's not one way to trade. I'm a momentum trader. This is what I do. Again, if it resonates with you, this is the channel to be on. If it's not, that's perfectly fine as well. Thanks for tuning in, guys. Have a fantastic day. We'll catch you tomorrow. See you then.